Okay, thank you very much for joining. This is Andy Pedraza with Special Effects Academy on March 25th, 2018 for our start of the week analysis of the Forex market. I'm going to take a look at what happened last week and what we expect from the week to come. And on that note, I will just get started. We're going to be going through, as usual, the currency strength meter, our fundamental announcements for the week, the major pairs, looking at the daily charts, any setups that we see in progress, and a few final words before we wrap up, and of course our Q&A section at the end. But again, if you have any questions along the way, do feel free to interrupt at any time. Thank you. Okay, starting out, and as usual, I forget to update the date on top. It should say March 25th. This is the relative strength meter for March 25th, and it does show the week before last is what you are seeing on the left side of the screen, and then the week that just closed. So we can see coming from the week before last that the Australian and the Canadian were the clear losers. They depreciated pretty much against everybody else. The pound and the JPY were the clear winners, appreciating again almost against everyone else. Both of these, the Aussie only failed with the Canadian, and the JPY only failed with the pound. But other than that, we see that these four currencies, the Australian dollar, Canadian dollar, British pound, and Japanese yen, were the clear losers and winners of the week before last. This past week, the Australian continued to be on the very bottom, so it depreciated even further from the week before last. So that's 2 weeks in a row that the Australian has been pretty much in the bottom. We did do some tradings, especially the Aussie against the JPY, that turned out very well. Aussie dollar, I think, as well. The Canadian did a turnaround and appreciated against every single other currency. So it did a reversal of what it had done the week before last. And we see that the other currencies pretty much were in the middle, except for the dollar. The dollar was another clear loser for the week, depreciating against everything except the Australian dollar. So we have the Australian dollar and the US dollar as the clear losers among the different currencies, with the Canadian dollar being the one that staged the best recovery, and we had a mixed bag among the other ones. So we're going to be focusing a lot on Australian, Canadian, and US. I also have the pound among my list of currencies to track for the week, as we'll come to that in the next chart. But that is a good comparison of what happened in the last two trading weeks. We see that the movement was sharper the week before last, having an extreme of almost 3%. It was a bit short of that for this past week. So volatility to a degree has fallen from the week before last into last week. Moving on to the fundamental announcement for this week to come. It is a very light week. This past week was extremely heavy in very high impact fundamentals, and that affected trading to a high degree. This coming week, pretty much we can say we have nothing. We have the GDP annualized for the US and the core personal consumption happening on Wednesday and Thursday. Core personal consumption comes out quarter over quarter on Wednesday and year over year on Thursday, but they're pretty much the same thing. I do not consider these high impact, despite what the calendar says, because they rarely tend to move the dollar too much in any direction. They're not that significant. And on Thursday, we also have the CPI, the core personal index for fresh food. That's a little bit important to the Japanese, but not anything significant in the grand scheme of things. The yen doesn't seem to move a whole lot based on the price index for these fresh foods out of Japan. So again, as far as I'm concerned, there really are no fundamental announcements that we need to track this week. So we can focus on our high-level fundamentals as well as whatever the technical analysis is telling us. So you can watch these, but if you do, you're going to find out that they really don't move the currencies in any significant way. And we will move on now to our major pairs as we look at the daily charts. This week, I've added a little bit of insight in the form of arrows annotating what I think the currency pair might do for the week. As I said last week, do not take these as predictions. They are simply higher odds that this is what will happen, but they're not meant to be set in stone or anything like that. In fact, the opposite of what I say could happen. This is just my initial impression before the week actually starts. I will revise that based on what the currency pairs actually do once trading begins. But if you look at the Euro USD, you can see on this daily chart that it has gone from the very bottom to the very top in a very clear trend line. And I would expect it to do another test of the chart high, which is why I think that this is what it will do. Doesn't mean that it has to go sideways until this point and then rise. This is just my indicator that I'm expecting it to go up there at some point. It may not be in a straight line. It could be a zigzag, whatever it does. But I do expect at some point a test of the area around 125.35 or perhaps a little bit higher. We do have another trend line that's coming down from some point in the past. So I am bullish on the Euro USD. For the USD Swiss, we see that the chart is the opposite of the euro dollar. This chart has been trending towards the bottom. It has done some pretty wide swings along the way. And it tried to do a test of the bottom, didn't quite get there, returned to a prior trend line and has now made a U-turn. I would expect this pair to do another test of that bottom. And both of the USD Swiss as well as the euro dollar, what I'm basically saying is that the dollar is going to get weaker for both things to happen. What I said in the prior chart and in this one, if we do have a weaker dollar, the euro dollar will continue rising while the USD Swiss will take another trip to the bottom of that chart. Moving on to the pound dollar. And much for the same reasons, I think this one is going to continue in an upward direction. It is following that trend line. It has moved away significantly, so it could do a reversal towards the trend line and then continue on its way up. But in general, the direction is pretty clear that it is heading again towards the top of the chart. It did a little bit of an extreme move in the recent past. It failed, retested to the trend line. It might do a more gradual slope approach to that trend line. But in essence, I am saying that this pair is also one to be bullish on for the coming weeks, not just this week to come. USDJPY, our next pair for review, has also been showing significant strength against the dollar. So this is another currency where we can see the dollar weakening and this chart heading towards the bottom. I drew a little bit of a storm cloud there because the JPY, the USDJPY, finally broke outside of the channel it had been following. That's the first time it's done that in quite a while. It may have overextended itself somewhat, so I'm not really sure what it's going to do. It has the potential to go much deeper. It also has the potential to reverse and do a further some sort of travel within the channel or test of the prior level of resistance. So while I'm very interested in trading this one, given the right signals, I would also be very careful. It might have moved a little bit too much too fast, and may now have to give up some of those gains before it continues going deeper. My ultimate target for the USDJPY is around 100. So it's trading about 500 pips above that level. It still has a ways to go down. I'm just not sure that this is the week it's going to end up doing that, if that makes any sense. USD Canadian. The USD Canadian in general is still weakening against the dollar. So you see that it is following a trend line towards the top of the chart. This is one of the few pairs that, while it did strengthen against the dollar, you can see that very long candle 3 candles ago, it didn't break the prior low. It has not quite done a reversal. In fact, it has returned to the trend line. This is because the Canadian dollar has been seeing significant weakness for quite a number of weeks now. We did have rising inflation numbers out of Canada, which in turn has sparked fears of inflation and all that coming in the future months. And what that's going to bring is most likely another rate hike out of the Canadian government, which in theory would strengthen the CAD a little bit, which explains that long candle. People are predicting that a rate hike is imminent. And if it comes, certainly it will help drive the price a little bit lower. But if there's no news coming out anytime soon and there's nothing scheduled for this week, then I would think that it would continue moving into weakness until that news actually comes out. That said, I have no idea what it's going to do. It could go sideways, it could go up, it could go down. No clue. I'll be keeping an eye on it, but it's not going to be a particular focus of mine, the USDCAD itself. I am going to be looking at the Canadian very closely, but not necessarily against the US dollar. We move next to the Aussie dollar, and this is a similar situation. We have seen the Aussie itself weakening significantly in the past 2 weeks, at the same time as the dollar also weakened. So this chart should have been traveling more sideways than continuing to head down. And this may be one of those pairs that goes into a retracement this week because it didn't travel in the same direction as the other dollar charts did. This one traveled significantly deeper into dollar strength, and we may have a test of the trend line, this trend line that is following on its way up. If it does, we're going to have about 200 pips worth of action. I made a note of this last week on the wrap up for the week that I'm going to be keeping a close eye on this pair. While it could go in any direction at all, as I said for the USDJPY, I have a sneaking suspicion that it is going to retrace into a bit of dollar weakness to catch up from last week when it just ignored that the dollar was weakening. So this one is also going to be high on my radar of things to be looking at. The Kiwi dollar, I'll wait for the chart to catch up on the screen. There we go. The Kiwi dollar has also been moving into dollar strength uncharacteristically because the rest of the market was moving in the opposite direction. This pair does not have that much to give up if it does do a retrace. If it goes back to this trend line, to either one of these two trend lines making that nice X right above the current price activity, that's less than 100 pips. So I'm going to be keeping an eye out for it. If it does continue heading down, I would see a lot more option for it to just do a test of the bottom, but that would imply dollar strength, which I really don't see coming out of this market. And of course, if it goes in the opposite direction, we'll probably have about 300 pips worth of activity from where it is to the top, but more likely this is going to start trending sideways. So unless I see some decisiveness out of it in either direction, up or down, it's probably not going to be at the forefront of what I would like to trade for this week. Hence my little cross there with arrows going in every direction. I'll wait for it to give a good signal, and it has to be good enough for me to think that it's going to either extreme, top or bottom of the chart, for me to get into this one. The euro pound. The euro pound has been producing nice profits for us for 2 weeks and counting now. It did a little bit of a retrace towards the end of the week. We see that it dropped significantly and then just rushed back up. It is still following a trend line that is not apparent on the daily because it hasn't really done a proper high since this one right at the top. So I haven't been able to draw an actual trend line, but you can see the direction. It's pretty steep. It's heading towards the bottom. I think it's going to continue towards the bottom. Pound strength against the euro, going to test this red line that indicates a take profit. This is an open trade I am carrying. That's why you see those lines on the screen. So we have it moving towards that spot. Not sure if it's going to reach it, not sure if it's going to be this week, but certainly what the technicals are telling us is that if it does have enough strength to pierce this dashed line right below the current price action, it certainly would continue to head towards our take profit point and perhaps even deeper towards the actual trend line that has been drawn from the top of the chart. So we'll see what this one brings. I still have that trade open. I will keep it open. And I'll keep you guys posted on what it does in our daily meetings. And if I see a good entry for anyone to hop back into this trade, I will certainly let you know. The EURJPY, next chart. There we go. Screen has caught up. Okay, so this chart has been also heading towards the bottom. So we've seen a little bit of euro weakness against the pound as well as the JPY. It also could, if the euro weakness continues and the JPY, as I have said for a while, is regaining strength, this could very well head all the way down to the 126 area, or even deeper into the 122, which is the very bottom of the chart. The last time it was down there was a little bit less than a year ago, about 10 months ago. It was at the bottom of the chart. It took all that time to make its way up, and now it is taking about the same time to try and make its way down. So this may be a longer term trade if we do see a good entry, in that it certainly is not going to play out in a single week that we see it drop 700 pips. But in a month or two, it can certainly have enough steam to make its way back down. This pair tends to fall much quicker than it rises, as you can see from this very deep dive that it did from the top of the chart. You see that there's only one instance of it doing that, and back about a year ago, where it rose that steeply also in a short time. Usually it travels in a much shallower pattern than what it is doing right now. So it is gaining momentum, gaining speed. We'll see if that gives us any good trading opportunities. Moving on to the EUROCAD. Bingo, screen's updated. EUROCAD had been following this channel on its way up for a very long time. Of course, the Canadian weakness forced it out in the last 2 or 3 weeks. It did make a new high and is now sort of trying to look for that channel again. I expect this one to continue heading higher. I don't know if it will rejoin the channel, which means that it could certainly drop a significant deal before it starts rising again. But in general, I would expect it to continue following that path, either above the channel or within the channel. I don't expect it to go any deeper than that. That would be a sign of extreme Canadian strength, and I don't see that coming. Even if the euro weakens significantly, I don't think that will make it drop all the way there. Euro Swiss is going to be our next pair, and this is a pair I've loved to hate for the last couple of weeks. We can see that it has been trading extremely flat after doing a nice little rise of a week or so. It then went into a sideways pattern, and unless something shocks it out of that, I would expect that to continue trading at that level and just following it towards the trend line. So again, not a pair that's going to be high on my radar for the coming week. GBPCAD. So we've had two things going on. Again, there you go. The screen's caught up. We've got two things going on with this pair. One, pound strength. The pound has been getting stronger. And two, Canadian weakness. That means that this one has been moving like a rocket towards the top because the two pairs are opposites. One is strong, one is weak. And that's making this chart just pick up speed as it heads up. I don't see anything to stop that from continuing. Obviously, these pairs do not move in a straight line ever. You will always see these zigzags as it goes up, down, but in general, going always further up, retracing a bit, going further up, retracing a bit. We might be due this week for another one of those going up again, which, as you can see from the chart, tend to be much longer than the retracement. So we'll have it going up towards the 185 area, which is about 300 pips. I would dearly love those 300 pips. So this is one of those that I'll be keeping a very close eye on as the week starts and into Monday for a good entry to trade it in that direction. It has been falling for the past 5 days. So most of last week, we saw this pair going backwards. But again, that is a normal retracement. And the retracement seems to have stalled out. We have a nice little, the last candle is a bit of a doji, also forming what could be a morning star, giving us indicators that this is going to be heading towards the top. The question is at what speed? So if I see this gaining speed at all, I will be jumping in as early as I can. So be on the lookout for any opportunities on the pound Canadian. And of course, if they happen while we're in our trading room or I enter any of these trades after hours or outside the trading room hours, I will of course email them out so everybody is aware. Pound JPY. I have been shying away from the pound JPY for the last couple of weeks, and I've explained why. This is because I consider both the pound and the JPY to be gaining strength, which means that they're going to be moving a little bit sideways. In fact, the pound JPY did drop from its channel. It dropped a little bit too much and, of course, has now retraced, rejoined the channel, and is bouncing around in there. So long as it stays within that channel, it might give us some good opportunities to trade it up and down. But at the same time, it's going to be a little bit risky. So it's going to be sideways action, but the sideways action may have a very long range of about 300 pips. If I see opportunities to trade it safely in either direction, I will take them. But I'm going to have to be very convinced by what the indicators as well as the price action in the chart is telling me before I jump in. Right now, it is going up. I didn't draw that trend line. I suppose I could have, but there is a trend line right here that is heading upward, and it just retraced to touch that trend line. If it pierces, it may go deeper to around this level of the outer trend line. And if it doesn't, of course, it may take a trip all the way back to the top. Keep a close eye on it, but is not going to be very high on my I guess, top 10 list for what I'm trying to do this week. Moving on to the AUDJPY. There we go. AUDJPY. Well, we've already seen that the Australian dollar weakened against pretty much everybody the last 2 weeks, and that is what you're seeing in this chart. The last 2 weeks are basically from this high over here. This is 2 weeks worth of action on these daily candles. It's just been heading straight towards the bottom. It may have also overextended itself. I don't know that the Australian has enough in it for another week, a third week of weakness, sustained. So this may be going into a little bit of sideways action, which is why I drew a much shallower arrow as my I guess, guidance for the week. It could certainly head deeper. It will do whatever it wants to do, and we will track it if it does. But I would be more likely to put my money on some sideways action or maybe even a retracement towards the trend line before it continues heading any deeper. Ultimately, I do think it'll end up going towards the apex of this little wedge that's being formed by the current price and the downward trend line. So another one I'll keep an eye out for. We did have some very successful trades on this one the last couple of weeks. And if we see any more, of course, we will take them. But this is another one that needs to be very convincing for me to jump in. Aussie Canadian, our next pair. This is, if the GBPJPY was a battle of the Titans, this is a battle of the weaklings. Both Australian and Canadian have been in sustained weakness for quite a while. The Canadian, of course, did have a pretty decent recovery week. So you can see that it regained strength against the Aussie, but it did not have enough strength to pierce the trend line that had already been formed. So it is stalled at that point. Likely we will see a bit of a retracement or a little bit of upward action here, or even sideways. So this is another one of those where I'm not sure what's going to happen. It could be good. It could be blah. We'll see when it does happen. And if I get any good signals, I will, of course, take the trades, but not going to be too high on my radar. That is the end of the major crosses that I cover in this weekly review. A little bit of my conclusions here. As I said, the Canadian pairs, the Canadian dollar has been on a roller coaster. It goes up 1 week, down the next week, up the next, down the next, and it's been doing that very consistently. If we can determine what direction it's going to take this week, very early in the week, we can probably trade 3 or 4 Canadian pairs very successfully. So the Canadian is top of my list for opportunities this week. The Aussie, for similar reasons, it's still in a meltdown. That's good if it continues, and also good if it reverses. We're agnostic. We don't care which way it goes. We're not married to the Australian. If it weakens, that's awesome. If it gets stronger, that's awesome as well. So we're going to be looking for indications in the first 1 or 2 trading days to see if it's going to continue weakening or if it's going to stage a recovery. And much like with the Canadian, if we determine what the direction is going to be for this week early enough, then we'll probably have another 4 days of trading both Canadian and Australian pairs to significant profit. This is some of those things that we look for. It's the perfect storm. We have a week without fundamental announcements, and we have 2 pairs that are going towards extremes, and they will either continue or reverse. I don't see them going sideways. The JPY pairs. The Japanese yen is a global hedge currency. When people get nervous anywhere around the world, especially in Britain and Europe, they tend to start moving their money into Japanese yen. It's considered sort of a safety net. We saw that happening right before Brexit. The yen strengthened considerably because all the Brits with money were parking it in Japan while the chaos at home played out. Same thing is happening right now. We see an increase in global uncertainty. The yen is becoming more attractive, hence stronger. We're going to be keeping a close eye on it because if anything makes people nervous, the yen can only get stronger as a result, and we can trade it very profitably if we detect that happening. The GBP pairs, the British pound continues to recover nicely, especially against the euro, which we've seen for the last 2 weeks now. That is still a good pair to monitor for further movement, but I'm also going to be keeping an eye out for all the other GBP pairs and see if we can play a strong pound against a weaker second currency, whichever one that is. As I said, I may not focus too much on the dollar. It is last on my list. The dollar is always good for movement, but it just keeps going in a very just uncertain approach. It resumed its weakness against the other currencies this past week. But then, you know, with the dollar, you're a tweet away or an announcement away from it just reversing and going into strength. So I do expect in the next year or two a significant drop in the dollar. That doesn't mean it has to happen this week. So I'm going to be keeping an eye on it pretty much every week. It's when it does happen, it's going to be fantastic. But I'm also going to be very cautious. I'm not going to be jumping in just because. But certainly the dollar pairs tend to move very well once they pick a direction and start gaining momentum. So these are the 5 currencies I'm going to be focusing on of the 8: CAD, Aussie, JPY, pound, and dollar for this week. The euro I completely left out. It seems to be in a consolidation pattern in general. So it's really not doing much of anything. It's just playing off against the strength or weakness of whatever currency is opposite of the euro in the pair that we're looking at. So we can safely ignore it. The Kiwi, the New Zealand dollar, is another one that is not doing much of anything. And the Swiss is the third one, not doing much of anything. So I'll pretty much leave those alone and focus on these 5 as the better opportunities. We won't know which one is the best or which ones are going to be the best until we have at least a day's worth of trading. So that will be tomorrow evening before we know which one is probably going to be the big mover. But if I see any trades setting up tonight after this call, I will certainly make sure to email them out as I enter them. But honestly, I don't expect there to be much happening tonight. My message of the week, as I like to call these, and it's based on whatever struck a chord in me the prior week, is fooled by randomness. As humans, we have a tendency to look for explanations. If the Canadian rises or the Canadian drops, or if it goes sideways, we go off into the news and we try to see what could have caused that. Sometimes the answer is nothing. When we look at these very small moves in the grand scheme of things, a week's worth of movement is really small. It's just the natural waves up and down of the market. It doesn't necessarily mean that something happened. And I've been listening to the news because I always listen to the news. I get a lot of trading ideas out of it. But it struck me that every time the dollar drops, you have these people on Bloomberg and the other financial outlets saying, well, you know, it had to drop because Trump did this, or the infrastructure spending bill got approved by Congress, or it's Mickey Mouse's 50th birthday, or whatever the explanation of the day is. Then the next day, the dollar drops, and those same people, I kid you not, because I do listen to them every day, will tell you that the dollar had to drop because Trump tweeted this, or the infrastructure bill got approved, or it's Mickey Mouse's 50th birthday. They will give you the same reasons today for the dollar dropping that they gave you yesterday for the dollar rising. Really, it is randomness. The market moves up and down. So don't fall for that trap that everything has to be explained. In the short term, Randomness is a much stronger factor than anything else. In the longer term, however, these moves most of the time are going to have explanations. So if we see that the euro is rising against the dollar and has been for the past year, there's an explanation behind that. Why it went in the opposite direction last week, that's just random movement of the markets. The general direction is the one that can be explained and is usually much stronger to break. So keep that in mind as you do your analysis and your trading. When we're trading long term, leverage the explanations because they will be there to a higher degree. The shorter term moves, follow the charts. If you see momentum building in the chart towards a short, that's when we short. It doesn't matter which way the longer term trend is. It's whatever is happening this week that guides our short term trading. And we make profit off of that, especially if we're not buying into that thing that because Trump tweeted, then, you know, the dollar has to rise tomorrow. That's just not the way it works. And on that note, I will shut up and open it up for questions. If you guys need to have me go back to any particular slide for anything, just let me know and I'll be happy to do that. Open mic. Do let me know if you can still hear me too.
Yeah, loud and clear. I haven't got any questions, to be honest.
Fantastic. Let's see who else.
Yeah, I can hear you too. And
oh, there you are. Jeffrey, how are you today?
On my phone because I'm good. I'm just taking my son back home, so that's why.
Excellent. I will send the presentation out in less than an hour, I'm going to say. However long it takes me to download it from one place and upload it into YouTube. So if you need to watch it for the charts, you most certainly can. I think you got the gist of it, and that's about it, man. So thanks for playing. Joseph or Hayden, anything from you guys?
Hey, how you doing? No, I'm good for right now.
Awesome. And Hayden is being very quiet today. That probably means Hayden's mic is not cooperating today. Yeah, I'm going to bet that's it. Okay, guys, then. Hayden, if you have any questions, email them to me. I'll be happy to answer them there because I see you're not having much luck with your mic. And as for the rest of you, thank you so much for joining me on this little Sunday adventure. I'll let you know if anything changes between now and tomorrow. Otherwise, I will talk to you guys at noon Eastern Daylight Time. Thank you so much.
Okay. Thank you all. Thank you, everybody.